This is the Bitcoin chart. We are having a nice pop on Bitcoin today. Bitcoin trading up about 4.4% on the morning session, almost $1,200 from this time yesterday. Now, one thing to note here, take a look. Basically, what we're looking at is a level of support right here, right? So this is very defined, and this is the beauty of charts. It kind of guides you to support and resistance. Notice how the lows right through here are all together at this 26,700 level. That's a very obvious support level. Notice how the highs right here are all at the 28,700 level. That's resistance. Look at the high of today. It was close to 28,700 on Bitcoin. So what this is telling me, and number one, where do I get that resistance from, by the way, because this is just cool stuff. But look at this low pivot here from the bull market dip in 2021. It is exactly at that price point, 28,700. So essentially what we're looking at here is that becomes resistance. That's why price is having so much trouble getting through this level. All right. So again, that is your level to watch. Now, again, what we're doing here is we're playing pinball. All right, meaning you're bouncing here, you're hitting off here, you're pulling back, you're going back and forth. And essentially what that tells us is that the more we hit one way, the weaker it becomes. So the more we hit to the upside, there is a chance that we could break up. I've said that for a while. I said, listen, there's a chance we could break above this 28,700 level. The problem is upside is limited to about 30,000 to 30,500. Again, that takes us back to this major consolidation area right here, as well as all of this over here. Even pre-bull market run up to 60,000, where we then pulled back, or 65, then we went to 69 and pulled back. That's that area right in there. All right, so again, the way I'm viewing this, the way I'm trading this, I have a tiny position short Bitcoin at 28,450. I will be adding to that at 30,000 Pierce, essentially. That puts me in a position to be short close to the 30,000 level. If we get above 30,000 and we stay there for a certain amount of time, like a time count, then I cover my short. All right. So this is a very calculated trade with a specific risk to the trade, right? And that's what it's all about, folks, is that in general, we want to know what's our end game. When does our thesis fail? And that's what we're doing in this chart. That's how I'm analyzing this chart.
Hello and welcome to Crypto Street. In today's video, founder and chief market strategist at InTheMoneyStocks.com and Verified Crypto Investing, Gareth Soloway updates about Bitcoin's current market standing, the final bottom in crypto, and his outlook for Bitcoin in 2023.
All right, next up, let's take a look at Ethereum. Now, Ethereum is kind of interesting here because you're in this upsloping channel, and it's a great upsloping channel. You connect these lows, that's exactly where we hit right over here. You go from these highs and it goes right on that same incline. Notice the blue lines are parallel. All right, so what this tells us is this is a lot of resistance right here around this 1,850 level. All right, if 1,850 does break and if we get above here, there's a run up to 2,000. Now, why is 2,000 very key? All right, the reason 2,000 is key on Ethereum is because it was the highest point right here since the lowest point was put in on Ethereum back in June of 2022. So again, the lowest point was put in June of 2022. The highest point since then was in August of 2022. That's, again, the upside potential. That's where Ethereum will meet resistance. Would I be a shorter there? I would. The reason I would be a shorter there is because I'm the type of trader that makes a level break. Otherwise, if it doesn't break and it's resistance, then the probabilities are dictating a pullback. So it's all about probabilities. There's no, oh, I'm always bearish. There's no, oh, I'm always bullish. There's none of that BS in this chart or in any charts that I look at. It's about specific levels. And as soon as you understand that, you become free. You become free to understand that, again, it's all about the odds. You become the casino. You are no longer the gambler. And that's what it is. It doesn't mean I win on every trade. Heck, I put out a video yesterday. I lost 99% on SBNY because the Fed halted it. The government halted that stock. I was in that stock at the time. And it basically opened yesterday at I think I sold it at 58 cents. So again, I lost 99% of that trade. I'm not perfect. No one is. But the key is, how much did I have invested in that trade? 1% of my portfolio. If you had $100,000 yesterday, you would have had 99,000. In addition, we closed out an Alibaba trade, 3.6% of our portfolio. Boom, we made back almost 50% of that loss right there. So it's all about position sizing. For those of you that are new out there and you guys are focused in and thinking to yourself, oh, okay, Think about this, right? You know, I have to make $1 million overnight, or I have to make it by the end of this year. That's the mentality that will make you go broke. Always remember that, guys. It's singles and doubles. You want to get to the Hall of Fame as an investor hitting singles and doubles. You know why? Because ultimately to hit home runs means you're going to strike out. And when you strike out in trading, that means you lose a big amount of money. And that is unacceptable. That kills your account. It basically puts you back to the starting point, and it is not good for your overall health and your financial wealth. All right, so let's take a look right here at gold. Gold's pulling back. Now, gold's had a great run. There's nothing to take away from gold here. You guys know I continue to be a huge bull on gold. But we are short-term extended here. We might need to consolidate a little bit more. After consolidation, is gold going higher? Absolutely. You're looking at a double top coming up. That's your next target at 2075. So essentially what I would say to you, or what I'm saying to myself, is that I am buying pullbacks. If we get a pullback in gold, I'm a buyer of gold. The chart is an amazing bullish. Look at this sideways bullish consolidation for the last 2+ years, the last 3 years. That is amazing. Last year in 22, everyone was like, oh, you know, gold is coming down here. It's not performing like Gareth said. By the way, it still beat the S&P and Bitcoin by a mile. But the key was, look at the dollar. The dollar was up 20%. 20% on the dollar, and gold was down for the year maybe 5%. That tells you huge accumulation. In fact, I did interviews where I said, guys, when the dollar is up 20% and gold doesn't decline by 20%, it tells you big money is buying. Don't be a fool. Follow the big money. There's a reason why big money is big money. It's because they know what the heck they're doing. And so ultimately, that's the key. And now we see this big move up this year. Look for it to attack 2075. My target for the end of this year is well north of 2075. Should be, again, potentially $2,300. Once we break out above 2075, that's your play. Look to buy miners on pullbacks. The miners will do really well this year because inflation is coming down. Last year, inflation was 9%. And you know what sucked for the miners? The fact that we saw inflation high and gold price was not going up. So they were basically making the same or less on selling their gold that they were mining, but all their costs were up precipitously. That was a bad recipe. That's why the miners underperformed. Take a look at the GDX here. Okay, this year it's going to be different. Gold price is going to go up quite a bit. On the other side of the coin, inflation is coming down. That means the miners are likely going to be outperforming. If we look at this chart of the GDX, which is the ETF for gold, take a look at this downsloping trend line right here. That's your line. That's going to be your next resistance at $39 and change. Once we get up there, expect a pullback and then look for a breakout to the upside.
So, what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.